So how does the Ottawa real estate home price inflation compare to the general level of inflation? If you'd like to find out, please stick around. So first of all, what do I mean by this? This is a question that's really been rattling around in my head for the last 3 to 4 months, where I've seen the prices of properties increase at a very fast pace. Last year, 2020, 19.5%. Whereas on the other hand, inflation, as reported in CPI, to the best of my knowledge, is wallowing around the 2% mark. So how come such a big discrepancy? House prices increasing at 19.5%, CPI at 2%. What's the connection? What am I missing? As I thought, let me go on a quest to find out. And I did, and I would like to share my findings with you. So my friends, my name is Faiz Versey. I'm a real estate broker with LePage Team Realty in Ottawa. Excuse me. And I can help you with any kind of real estate service, buying or selling. If you have any of those needs, please feel free to look me up. So when I thought about this problem, I thought, hey, this is going to be a very big problem. I don't think I can answer the question myself. I don't know that much about inflation. I know the basics, but I don't know that much about inflation and then home price inflation. So I enlisted some help, and I was very lucky. I got the help of some economists. And let me just explain to you who these people are so you have some idea. So this is a book that I grabbed from my shelf. This is Real Estate as a Professional Career. It's the first course that I took when I was on the journey of becoming a real estate salesperson. And then later on from there, I progressed to real estate broker. And in here we talk about, and I'll just flip to the page now. I don't know if you can see it, but here we talk about this. We talk about organized real estate in Ontario. And this is sort of the tiers of organized real estate in Ontario. Right at the top is CREA, Canadian Real Estate Association. And then we have the various provincial boards, for example, the Ontario Real Estate Association. And below that, we have the various boards, for example, the Ottawa Real Estate Board, of which I'm a member. I'm a member of this entire group over here, but specifically of the Ottawa Real Estate Board. And so me down here, I said, let me try and enlist the help of some very big brain power here. So I went and approached the economists who work for CREA, the Canadian Real Estate Association, and I was very pleasantly surprised they did decide to help me. So I spoke with Shaun Cathcart, who is the senior economist, and with Ryan Biln, who is an economist, both of them working with the Canadian Real Estate Association, and they were kind enough to take my question and do a study around it. So that's the study that I'm going to explain and share with you today to see if we can make sense of this issue about general inflation at 2%, home price inflation at 19.5%, what's really going on. Now, why is this important? Let me just take a step back before I move forward and say, why is this so important for you to understand? Because inflation, if we miscalculate it, if we don't understand it, we're going to end up in a problem place down the road. So I won't go too much into that calculation. Just understand that we need to understand inflation. It affects our retirement. It affects if we're going to be able to live. Will we have enough money saved up? So we really need to know, is inflation 2% or is it 19.5%? Why am I saying 19.5%? Because that was the rate of property increases in prices in houses here in Ottawa in 2019 and in 2020. And I have a chart on that as well, which we will also discuss. Let's carry on. So before I move to the chart that my economist friends came up with, let me take you to this chart. This is a very interesting chart. I need to do pretty much a seminar on this one, and I'm probably going to talk about it now in detail and then pull this seminar out of this seminar to create a separate seminar, which will be called the 64-year history of residential home prices in Ottawa. So let's look at this. This is a very interesting chart. I often share it with my clients. And the title here is Ottawa Residential Average Sales Chart from 1956 to 2020. That's a 64-year history. That is a lot of history. And that tells us a lot of things. We're going to get tremendous insight as I take you through this chart. So if you look over here, we start here in 1956. And the average sale price at that point in time of a residential house was $13,351. The first thing to note is that same house is now, at the end of 2020, $529,675. So my friends, is it a good time to buy in Ottawa? Absolutely, it's a great time to buy. Anytime, all the time. You'll see further as we go through this chart. So if we look at this chart here, some things that I'll point out to you is let's look at the number of negatives. So these are percentage changes. If we look at the negatives, count with me. 1, 2, 3, 4, 5. Okay, so there were 5 negatives out of 64 years. I think that's like a 92, 93% chance that when you buy a house this year, it's going to go up next year. Okay, those are excellent odds. So for those of you who are waiting for the housing prices to come down, you know, I've been banging the table on this for the last 2-3 years that I've been doing videos. Please just buy a house. If you want to buy a house, go out and buy a house. It is possibly the best thing you're going to do for yourself. Best investment, best lifestyle decision, and you better get it done because house prices tend to go up in Ottawa. Is it a good time to sell? Now, when it comes to selling, it depends on your personal circumstances. What are you selling for? People sell for many different reasons. For example, they want to move up to buy another house. They want to move down, perhaps, to move from a house into a condo. They may have a job situation where they want to move for a job situation. So there are many, many reasons. It all depends on what your personal circumstances are. And generally, it's a good time to sell as well, because if the prices are trending up, well, that's a good time to take advantage of it. So that's what I can share with you about this chart. Now, I'm just going to stop speaking again and go to another chart. Ta-da! Okay, my friends, I hope I can do justice to this chart. This is the chart that my economist friends at Canadian Real Estate Association, which, as I described to you, is the top tier in organized real estate, meaning that they are at the Fed level. So these are the Feds, okay? You don't argue with the Fed. Just a moment. Well, I did kind of argue a little bit, but anyways, they have done some tremendous work, and we'll see what's over here. Again, my big thank you to Shaun Cathcart and Ryan Biln. And it's nice to have an organization like the Canadian Real Estate Association around that can provide such amazing information to we lowly real estate salespeople and brokers. We do our best to help our clients, but thankfully we've got this huge engine behind us, both at our brokerage level and in organized real estate, that can help us to provide an even better service than we could individually ourselves to our clients. So I hope I can do this chart justice, and the reason I'm saying that is because my friends are economists and they have explained this to me, and I will try my best. But I'm approaching this from the perspective of a layperson. So if you are an economist, you're watching this, you have something to add, please feel free to do so. Or if you're a layperson like me and you want to add something, you want to ask a question, by all means, there is a place below this video. Just jump in there and ask away. Sometimes that's the best way to get to the bottom of questions and issues, just by engaging and asking the questions. No such thing as a bad question. Okay, so let's carry on. Let's look at this graph. So this graph is an amazing history of, let me read it out, real average residential home price in Ottawa compound annual average growth. Whoa, what does that mean? Okay, I'm not going to explain it. And then it's looking, the data is going back to 1971 and up to 2020. So 50 years of history in this chart compared to the other chart I was talking about, where we're looking at a 64-year history. They gave me a reason for that. I believe that CPI numbers don't go further back than 1971, to the best of my knowledge. So we had to start this analysis, this study, in 1971. Okay, so first thing you need to understand is this word real in order for us to understand this chart. This chart, as was explained to me, is this information that I'm trying to find out. It could have been sliced and diced in 1,000 different ways, but this is probably the star chart, as my friends mentioned, which encapsulates all the information that I'm looking for to arrive at the conclusions I'm looking for in as simple as possible, in 6 bars. So it's an amazing graph. So the first thing we need to understand, if we're going to understand this chart, is to understand the word real. And real means, now, for example, if inflation was 2% and the property prices grew at 5%, so the real growth is 3%. Yeah? You got that? So that's what real growth means. The growth in the asset you're looking at, growth over and above inflation. So now, the reason these have been divided into 1, 2, 3, 4, 5, I'll come back to the 6th one, 5 bar charts representing a decade each. Just for simplicity, they don't exactly follow the patterns of home price movement, but it is good enough for the purpose of what I'm trying to find out. So 1971 to 1980, we had a real growth of approximately 1%. And so that was good. That was real growth over and above inflation. Then the 1980s, we had strong real growth. You see that? You see where my cursor is circling? So over 3% real growth. And that's because we had strong growth in the housing market. I think it was in the late 80s. Now, in 1991 to 2000, we had a small negative growth. Negative growth in real growth, because property prices were essentially flat, but we had inflation. So property price minus inflation is slightly negative, just slightly negative. So we had a pretty flattish year in the 1990s as far as property growth goes. Then we come to the 2000s, where again we had strong real growth, because again from 2000, I believe 2002 to 2007, we had very strong growth in the prices of properties. And then now the decade that we have just crossed, 2011 to 2020, which is what prompted my whole issue around what's going on with property prices, is again we see in relation to inflation, again we see strong real growth here. And the reason for that is we've had strong real growth, strong growth in property prices in the latter half of this decade, which has pushed up the real growth. Again, I'm emphasizing that word, real growth, okay, versus just inflation. So what does all this mean? This is the star chart. Let's look at it. And all of these numbers here are combined in this one chart over here, which represents the whole story from 1971 to 2020. So it's good to see the breakdown, because that represents the different cycles. And cycles go up and down for different reasons. I'll come to that in a moment. But what this is showing us is that overall average residential home price in Ottawa, compound annual average growth has averaged about 2%. So the real growth has averaged about 2% for the last 50 years. Nothing too crazy. So it's pretty much in line with inflation. Okay, so that is the conclusion of what I am trying to understand here. Is inflation a different number? Is real estate property prices inflation a different number? No, they're approximately the same. The other good news that we can take away from this chart is that generally, because this is a positive number here, generally property prices maintain their value over time. Let me go back again to the chart I was speaking about earlier. I want to point out a few more things over there. So now back to this chart, the Ottawa residential average sales chart from 1956 to 2020. As I mentioned, nothing too crazy is happening right now in the market. What we are seeing, a 19.5% growth in 2020 is crazy for 2020. But overall, in the big scheme of things, it's pretty much in line with what we've been seeing for the last many number of years. So for example, if I go back to post-1971, 4.81, here we've had another big increase here, another big increase here, another big increase here, another big increase here. So there's nothing happening now that we haven't seen before. And if I combine this chart and that chart, so if I combine the two charts and the information that I'm trying to present to you, I think everything looks pretty steady. Why are we having a very hot market in Ottawa right now? I've explained that in detail, so I don't want to go into that now. Where have I explained it in detail? Please go back and look at my December 2020 video called Faiz Versey's Daring Predictions for 2021, in which I talk about my expectation for the property market in 2021 and the reasons why I think it's going to do what it's going to do. So please go and look at that video, and I don't want to repeat it here. This video will become too very long. My friends, that brings me to the end of this video. Is there anything else I wanted to add? No, I can't really think of anything else. I hope you found it helpful. Please do me a favor. If you liked it, please click the like button. Yeah. If you didn't like it, you can click the unlike button if you wish. Please do subscribe. As I put out more videos, you'll get to know about them. And my friends, what else can I say? Yes, I'm a real estate broker. I think I've mentioned this. So if you have any needs in the real estate field, please feel free to give me a call. I'll be delighted to spend some time with you and see how I may be of help. My friends, as we go forward, take care. COVID is not over entirely, and the whole country still has to be vaccinated. I hope all of that rolls out. I hope you keep safe. And until I speak with you again, take care. Bye-bye.